When it comes to consumer investment, Song Xiangqian, the founder of Jiawa Capital, is an unavoidable figure. Even if you don't pay attention to the investment industry itself, you might have heard some of his remarks. In recent years, many well-known institutions have been pulling out of consumer investment. At the lowest point of consumer investment, he kept stepping forward, emphasizing that consumer demand never sleeps, that you should never underestimate the consumer industry, and that you should never lose confidence in consumer investment. Not only does he cheer on and support the industry, but when it comes to trends or practices he disapproves of, he never hesitates to fire back. When tech investment started to look down on consumer investment, he had the courage to publicly voice a different opinion. When a certain coffee company was caught faking its numbers, he spoke out sharply, saying this was damaging the credibility of Chinese concept stocks. When executives at heavily loss-making new energy vehicle companies received annual compensation packages exceeding $1 billion, he criticized it as a capital gain where bad money drives out the good. And when consumer investors were forced to switch tracks and turn to the tech industry, he warned that blindly chasing consumer tech would also lead to negative consequences. It's normal for investors to scrutinize those they invest in with a bit more sharpness. But when facing a downturn in an entire industry, trying to turn things around and boost confidence single-handedly takes more than just courage, it requires real strength. After all, in the investment market, passion alone isn't enough. As they say, the market doesn't care about tears. In the end, it's all about results. At the end of 2024, when many investment institutions saw that national policies were increasingly emphasizing consumption to drive domestic demand and began to reassess their strategies in the consumer investment market, Jiawa Capital had already delivered the most impressive report card in the history of consumer investments. An investment project that yielded an 8.5 billion return came from Dongpeng Beverage. Within the investment community, there are certainly stories of people striking it rich overnight thanks to luck, but for Jiawa Capital, which has steadfastly focused on consumer investments, this report card was both inevitable and certain. Over the past years, Jiawa Capital has invested in more than 30 consumer projects, with notable examples including Kiakia Food, Leifen, ORG Packaging, Dongpeng Beverage, Lao Xiangji, and Bobby Mantu. Not long ago, Xiang successfully went public on the Hong Kong Stock Exchange with a market value in the billions, and Lao Xiangji also made its debut on the Hong Kong market. Both are projects that Jiawa Capital has supported for many years. Achieving all of this takes more than just perseverance. Jiawa Capital needs to understand the true significance of the consumer industry from a macro perspective, have a clear cognitive framework at the meso level to accurately grasp industry trends, and possess the right methods to identify great companies. All three are indispensable for Jiawa Capital. Beyond the broader consumer investment cycle, Jiawa Capital also has its own smaller cycles and methodologies. That's why Jiawa Capital is now entering a season of harvest. And Song Xiangqian, who has often gone against so-called mainstream opinions, also deserves a reassessment for his contributions to the entire consumer investment sector. In investing, what you look for are opportunities that exist outside of consensus. But when an entire sector is being talked down, it's not easy to stick to your original intentions and judgment, to remain unmoved, and to willingly be part of the minority outside the mainstream voices. Consumer investment experienced a small boom a few years ago, specifically around 2020 to 2021. The backdrop was a surge of new consumer brands, which drove market valuations higher and higher. However, like all tides, this consumer boom rose quickly and fiercely, so when the tide receded, it left quite a mess on the beach. As a result, the mainstream opinion in the investment community at the time was that consumer investment was no longer viable, and that investment firms should pull out in time. Against this backdrop, it became common to hear stories of many firms downsizing their consumer teams, and even consumer investment managers being forced to switch careers. But Song Xiangqian was undeterred. He seized every opportunity and steadfastly supported the consumer industry. In 2022, during an interview, he mentioned that from the tax and fiscal system, we can see that China's tax revenue mainly comes from value-added tax, income tax, and other such taxes. The economic contribution of consumption in society is very high, with consumption accounting for about 60% of GDP growth. Consumption has become the stable cornerstone of China's economy. If the economy wants to quickly recover from first-line impacts, we must provide a safety net and support for the consumer industry. At the same time, he has also been boosting confidence in consumer investment, consistently emphasizing that Jiahua Capital will focus on consumer investments. As an institution focused on consumer investments, Jiahua targets essential needs, high-frequency consumption, livelihood-related sectors, and products with exceptional value for money, as well as the construction of basic infrastructure for people's daily lives, all to provide good products and services to the public. Even without so-called demographic or era dividends, we are committed to working diligently, pursuing management efficiency, and optimizing operations. Of course, the issues exposed in new consumer investments also need to be faced head-on. Song Xiangqian believes that, at this point, new consumer brands must understand one thing: simply focusing on traffic is just an online channel, not a company in the true sense. In fact, the cooling of the new consumer sector and the underperformance of some new consumer brands have directly impacted market and investor confidence. However, in the environment at that time, just talking about consumption for the sake of consumption was not convincing enough. Someone needs to be able to take a macroeconomic perspective to provide a more comprehensive explanation of the problems facing the consumer industry and to predict its prospects. On one hand, the question that needs to be answered is how to view the relationship between the consumer industry and other sectors. The importance of an industry to the national economy, much like happiness, is largely a matter of comparison. This topic can be made even more direct. In essence, it's about answering how we should view the value of the consumer industry when the country is strongly promoting investment in technology. To be honest, there is indeed a hierarchy of disdain from the tech industry toward the consumer industry. Song Xiangqian has been in the investment industry for many years, has witnessed its ups and downs, and does not shy away from topics comparing the consumer and tech sectors. Song Xiangqian believes that although consumer companies are currently facing some challenges in going public, these are only short-term issues. In the long run, providing good products and services to ordinary people, creating massive employment opportunities, and generating significant tax revenue not only align with the country's advocated direction for social development, but also help address the main contradictions present in society's development. He urges that we should not pit consumption and technology against each other. We shouldn't force the market to make a binary choice between the two. On the contrary, both technology and the consumer service industry are pillars and foundational sectors of the national economy, and both should and must be developed well. We shouldn't implement discriminatory industrial policies in the name of so-called development. Consumption and technology are two sides of the same coin in economic and social development, and they are also the two most important elements of the national economy. One is technological advancement, and the other is consumption support. Consumption creates scenarios for technology, and it has been proven that national policymakers recognize the importance of consumption. Recently, the Central Committee of the Communist Party of China and the State Council issued the Strategic Plan for Expanding Domestic Demand 2022 to 2035. By 2025, boosting domestic demand and increasing consumption will be key areas of focus for society. It is also at this time that some speculative capital has suddenly realized this and is now trying to chase after investments in consumption. On the other hand, if we look at it from a vertical perspective, extending the timeline and historical dimension, we can see the development and changes in consumption investment. If China's consumer market is destined to enter the fourth era of consumption, which brands will be the brands of the next decade? Finding the right answer, truly identifying the direction of the tide, is not easy. When Song Xiangqian founded Jiahua Capital in 2007, many people still didn't know what venture capital was, let alone understand the logic behind investing in niche markets. However, even in the early days of founding Jiahua Capital, Song Xiangqian already had an investment philosophy that is largely the same as it is today. In 2010, Jiahua Capital invested in Xiang Seeds. The founder, Xian, is a typical example of the first generation of entrepreneurs. He quit his government job at the age of 36 to start his own business. Young people today might find the term going into business a bit unfamiliar, but back then, it was a symbol of courage and innovation. Xiang Seeds is a classic example of a small product produced on a large scale. It's widely suitable for people of all ages and fits a variety of consumption scenarios, including family gatherings, business events, and personal leisure. Xian places great importance on product quality, as well as on marketing and promotion. When Xiang expanded into overseas markets, they developed new flavors tailored to the characteristics of local markets. In 2011, Xiang Foods successfully went public with an IPO. At first glance, the consumer retail industry seems to have a relatively low barrier to entry, and many entrepreneurs in consumer-focused cities may not necessarily have impressive backgrounds. However, the scope of the consumer industry is extremely broad, with numerous subsectors. Many of these fields are easy to get into but hard to master. Everything from small breakfast stalls on the street to large-scale chain brands with thousands of stores falls under the broad category of consumer retail. Moreover, it is closely linked to the food industry and even the logistics supply chain, which places high demands on entrepreneurs' overall abilities and capacity to learn. Even within a specific niche, there are its own structural characteristics. So how should we grasp this? Take the restaurant industry, which is the most common sector for ordinary people, as an example. In 2024, is it actually a good year for the restaurant business? If you look at the data, the restaurant industry's closure rate in 2024 is not low, and many small and medium-sized players haven't been able to hold on and have exited the market. But looking at it from another angle, the industry has seen the emergence of a second new-style tea beverage company going public. Yuan has been listed, and at the turn of the year, Mishu at Bingcheng and Lao Xiangji have both resubmitted their IPO applications. You could also say this is a year of breaking the ice. Based on the social characteristics seen in Japan's fourth consumption era, we can infer that in the next decade, the Chinese market may not need as many brands as it does now, because consumers' purchasing behavior will become more streamlined, focusing on practicality and efficiency. Jiahua also has a very clear vision of what kind of brands will stand out in the future. Song Xiangqian has repeatedly emphasized that the key to a successful brand is meeting high-frequency, essential needs. You have to find great products and brands that address the demands of mass consumers. It's precisely because of this understanding and positioning that, whether the market is bustling or quiet, Jiahua Capital has always stuck to a classic investment approach, maintaining an extremely prudent investment style. They review more than 200 companies a year, but only make 3 or 4 investments. Jiahua's investment principle is to believe that 20 years from now, this brand will be deeply integrated into people's daily lives, like finding the one fish that survives out of 100. Dongpeng Special Drink, RB Mantu, and Yuan are all examples of the big fish that Jiahua Capital has discovered.